All right, guys, you're welcome today. This is Trader C Brown here, and I want to get into analyzing the market for week 21. Now, week 21, it just started from tonight when the market opened, which is Sunday night, and tomorrow by Monday morning, we should be looking at week 21 trading and all of the pairs that I'm going to talk about today, which is basically the two major pair and also maybe one more, which is gold that I will talk about today, might be what we're looking at. So first of all, it depends on the type of trader that you are. Remember that it depends on the type of trader that you are. If you are a day trader, then you want to look at time frames that are for day traders. If you are trading as a day trader, and scalping is almost the same time frame that they use. So they only go to the lowest time frame to get into to get their entry when they scalp. But the directional bias may affect both traders as well. Then if you are a swing trader, then you know that you have to take more caution on the higher time frame, looking at the higher time frame to make your decisions. And then you want to get a trade, maybe 1 to 2 trade a week or so, and then close your trade at the end of the week if you want to, or if you have the luxury for swap, then leave it for the next week until your TP is hit. Like the trade we took previously, we did some swing trade about 2 weeks ago. It took about 2 weeks, like Euro USD, Euro JPY, and what other pair that we took the other time? AUJPY, AUDJPY. We took those trades, and it took a while for the market to get to TP. That means it took about 2 weeks for the market to get to our TP. So such a case or scenario is called swing trade. And you should have that in mind, that such cases come up. All you need to do, which I'm going to be sharing in another video, is how to add to positions in every step of the market where you find a break of structure or you find that there's a pullback and you get in. So today, let me just go to GU. First of all, GU is beginning to look bullish. This is the daily, and we can see that break of structure has happened. If you just see, we can see that this was a previous structure high that price broke and eventually is targeting this high and this high. So on the daily, we should anticipate that price may eventually take out this high, which is this top resistance here that it has created over time. And also that might be a very key area of price, because we can see that there was previously liquidity pool there, and price is rallying back to that area. And it's a very strong key area as well, which is price level 1.2800. And when we're looking at if it was going to break, because initially it broke it and it pulled back in and then dropped massively. Excuse me. So it dropped massively. So now price is going back up to that area as a kind of a break and retest, I think. But let's see. At the moment, GU is bullish. That's all I can say. Now, to confirm that, I have a tool which I use, which is a moving average of a small, simple moving average. And you can see that it forms like a consolidation, but it's breaking above it already, showing us that, okay, price is beginning to head up. But again, don't take my word for it, because GU can be so funny sometimes, and then it goes, it goes in that direction and you wonder what's going on with it. So that's what GU does. So let me just show you something here. Now on this is one of my two that I use, and you can notice that just a minute. You notice that price on the daily has given us a buy scenario, a buy trigger. Okay, it has given us a buy trigger. So let me just show you what I mean. I'll just turn out, where's it? Turn the blue line off. Okay. all right, because I'm using that. So we can see that it's giving us a buy scenario here. Now the moving average has turned from red to green, which is confirming, and we have a cross, which is also giving us a signal here that the price is bullish on the daily. So that's the only signal we're looking at. The price gave us a bullish momentum, so we can see that we are bullish on this, which is okay. I have a confirmation. That's number one. Number two, of course, breakup structure shows that, and you can tell that under the flow of price action, you can see price action here. I'll just show you order flow that happened here. This was a swing up. We have this low was broken. This was a previous low that the market created from here to this place, and when it was trading low, and then we have that. So price rally up now by breaking this high. So we can literally say that right now price has broke that high with this push up, okay, which is this area here. Obviously it is. From there we have a break above, and price consolidated a little bit, and now we have another break above that high, which is obviously this place. Liquidity was grabbed. We have the daily liquidity grab here, and then price rally up. So we have this daily liquidity grab at this level, and then we have price pulling up over here. So this is the range at which you're looking at on the daily. That's number one. So now I haven't had that in place. The next thing you want to look at is the 4 hour. So first of all, on the daily, we confirm that we're bullish. So where we want to mark on the daily is over here. First, we have price already breaking this high, as you can see. So we want to mark the daily highs. First, we have this area as a first high that the market may target. And we have another area as a second high that the market want to target. So first, we know that the market is bullish. So reasonable pullback could be into the current support area that the market just created. All right. All right. That's the current support area that the market just broke above. And now we can see, obviously, that that's the range that we're looking at. Okay. So the next thing is we want to trade this area, this zone, on a lower time frame. That's what we want to trade. We want to trade this zone on a lower time frame. So we'll go to the 4 hour to look at our structural behavior. So we can see already that on the 4 hour we're also bullish. So we can see structures is giving us a clear bullish structure to the upside. Okay, we have again another liquidity, 4 hour liquidity grab there. And then we have a push. See, there's a rally, market rally up after that, and then created this range. So we could literally say that there is a key level here that the market created for the 4 hour. That's the only area we might think of, that if it drop, pull back into that level, we'll look for more buys. Again, that is the structure, the area that broke structure to this side. Okay, remember that. So and now we have this area here. Price already broke this high. We can see it's already taking out the high, so it's going to take it out. So assuming price pull back a little, we might have that, but it's going to take this out. So we should be looking for a more push up. Even before the market open, you might have that high broken, confirm that that high is taken out. But we will need a pullback before we get in. So we want to see another pullback. We want the market to pull back and then continue to the upside. It might not pull back into that structure. It might create a new structure here, which is this base. It might pull up a little bit and create a new structure base on the 4 hour. And then we're looking at a buy. Okay. So on this pair right now, what you should be looking at is a buy. Both technically, this is just technical view on this pair. Now, there is a fundamental side of it, but let me first of all round it up with this. Now you see there's a pullback here. This is where the pullback came in, and then price rally up. Now this is the current swing that the market just created. So I can intentionally see this as a liquidity area. So what would I do? I'll put this here as a swingy, as a range, okay, a range. So price may come back now and take our liquidity or push higher. So whichever it does, if it push higher, I'm going to take that range high. And then I'll look for an area where price possibly maybe at this structure that is just being created now. I'll look for that area structure for price to come back in. That means coming back into that area as a retest, a break and retest, then rally up. So we might be able to catch some pips for the week, maybe about 100 pips or 80 pips, depending on the market. And then we're looking at targeting this high and that high. So at the moment, market is moving up. We need a pullback, a reasonable pullback for us to get into the trade. This was a pullback, but it wasn't strong enough. And the market is extremely bullish. So if you go to your entry time frame, that's where you want to look. You can see already there's a funny pullback going on. We can see price break above already on the 30 minutes, but we know that we want to see a price at least pull back to a reasonable area. So let's assume that you're looking for entries on a lower time frame like this. You already know the market is bullish. That's the first thing you want to know. So you want price to pull back into a structure, into meaningful structure area, either here or here, and then continue to buy. Always watch out for that. It may not come to this key area, but depending on the kind of trader that you are, whether you're a scalper, day trader, or swing trader. But remember, this market is bullish and we are looking to buy. Now, I want to show you something else on the fundamental, confirming that we are bullish. And this is my tool that I use for fundamental. I bought this tool from one of my mentor, which is Nick, Trader Nick. So obviously, it's a very powerful tool on calculating for them, because I study about fundamentals, how to implement fundamental trade in fundamental analysis to my trade, and I discovered that there's a lot of data, there's a lot of information to consider. You have to consider the COT, you have to consider the retail position, you have to consider seasonality, consider inflation, employment change, or unemployment rates, interest rates, CPI, all of those things put together. So you have to consider a lot of economic data. And for me, a lot of reading will have to be done. You have to do a lot of reading for you to know the position. So this guy really did an amazing job by creating this tool. I'm not an affiliate program to it, but I bought it many years ago, about 2-3 years ago, when he actually launched it. That's when I bought it. So this tool is very powerful to let you know the direction on the fundamentals. So your fundamental must agree with your technicals for you to take that trade. Otherwise, you're not going to take the trade. So you can see that gold is very bullish, Euro USD is very bullish, and GU is very bullish. So gold is a top bullish market right there. So I normally will go with the very bullish ones or very bearish ones. The one that are bearish, kind of, they are actually beginning to start a trend. So for that reason, I wouldn't want to get into this, because they can fall into consolidation and be neutral. So let's look at the doctors on the forex tools. I mean the forex pair. So we're looking at GBP USD. Now this is Euro USD. I will select my pair here, which is GBP USD. And right here on GBP USD, this is what we have. We can see that the sign is telling us that we're very bullish. And the retail position is what is king here. If you can look at the retail position, it's telling us that the retail are longing on 15%, and while we have retail short 85%. So we have 85% people trying to sell the market. And you can tell that when the masses, most of the time in forex trading, the masses happens to be very, 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 very wrong. They are wrong most of the time. But the reason why they may be right or wrong on this one is because the COT data is very, very funny. We can see that the COT data is almost equal, the same. They are the same. They're looking at the same, which is extremely consolidating. For me, that is 50-50, almost 50-50. So that means the market is going to be struggling based on consolidation. Remember, on GU, we had on the daily, the market broke out of consolidation here and is going back in there again. So you can see it came out of consolidation and it's back in there again. So what is the guarantee that it will not continue in the consolidation? We don't know. So on the 50-50, I could tell that, okay, why people want to sell and people want to buy. And if even the COT data, the big guy, the smart money, let me show you what I mean by smart money. I will not do it on Euro USD anymore. So I just wanted to use an idea on this one when I'm doing Euro USD. Let me show you what the smart money guys are looking to do. Now let me show you where is it? Sentimental. Great. Look at it. Let me show you something there. Now, this is, let me check the GB. Let's change our pair to GBP USD. Okay. Now, this is the positioning of both the COT, I mean, the COT, that means the big guys and retail traders. Okay. Now, the blue is the big guys. The retail trader is obviously the red ones. Okay. You see that they are almost looking like the same in position. Both of them are in bearish position, and that's very strange. Okay. A little more, they are in bearish position. They are below this average, but price is up here. So it means that this is a forecast. It means that price will soon drop and then continue in the direction of that place. So for me, I'm very skeptical about GU trading it. Even though it's bullish, we have to be very careful. And then look at USD. On USD, they have 52 long. The COD is telling us that they are longing on 52, and British pounds, they are longing on what? They are shorting 53, 54. I mean 58. So that means if we were to look at the position of this pair, it shows that we need to be very careful because we have 58% of the COT position taken on GU, which is sell. And we also have on the USD, we have 47% of the 47%, 52%, sorry, 52% of the position long. So you can see that it's almost like the same. If we're to single-handedly take that, let me see, if you to take that, if we were to take that, let me use retail position. If we were to take that, you will see that on the retail position, which is here, it shows that 15% are buying the market and 83% are long in the market. So that's why we can see that bullish run. But nevertheless, today is not for me to show you everything about how to use this tool for your fundamentals. I'm still learning on how to use it, but it helps me to understand that, okay, if I'm going to be trading the pair, then I should be looking at that direction. So let's take another one, which is maybe Euro USD. It could be better. Now on Euro USD, we are looking bullish as well. As you can see, the market is looking bullish on the fundamentals. Again, we have that Euro USD on the COD data. Let's go to the top. So yeah, we see Euro USD is bullish right here. So we can see that Euro USD is extremely bullish. So which is great. So we can look at that as, okay, we're looking to buy the market on Euro USD. So we need to position ourselves and it's okay, what are we doing on the technicals? Can the technical tell us? Of course, we can see the recent daily structure is this. And you can see that the market just playing around that support, I mean, that resistance zone right now. So we can see that obviously this is the only structure high that we're looking at on technical to know that price is eventually going to go up. So we need this high to be broken. You see, we need that high to be broken on a daily for us to know that, okay, we are really bullish, even though on the fundamental appears to be bullish, but we need that. We need these conditions to be high. So for us, we need a break out of this zone for us to take a buy. So if that happens, possibly we should be targeting this high on Euro USD. Okay, we should be targeting the high on Euro USD to just to know that, okay, fine, we are on the right side trading it, because at the moment it's still showing that price is at the key area, which could possibly be like a structure right there. So here is the key. Although there's a break here already, if you check based on the body, it kind of broke above it, but we still need a clear cut. We still need price to push higher than that high and then pull back. So what we need on Euro USD is to see that price push up and then pull back a little bit and then continue to the upside. That's what we want to see. Or it could pull back if you want to, break above that high, pull back again, and then maybe break above again, because again, this is very strong key area that price is at. So we need to be very careful as well in taking that position. So here I'm looking at, this is a strong support area that we should anticipate that price may jump into, or we may just take it to this low. All right, the whole candle of that, this is this candle here. So we can see that as a strong support area that the market have utilized over time. So we may look at that as a reasonable pullback area, which can be a springboard for the market to push up. So at the moment, yes, it's bullish, but we need to see a clear structure out of this high. Okay, now if you go to the 4-hour time frame, you will observe that is a clear cut on the bullish market. So the market is clearly bullish. If you check the structures, we have this swing high that created a strong bullish momentum in the market. And then we have a break of that structure. And at this level, at another swing. So right now, this is the range, the 4-hour range that we are looking at. This is the current 4-hour range. So if we're going to look for buys, we expect price to come into this area of a secondary order block that it created here for us to look for opportunity to buy. We see price almost close there, and we want to see that. Another tool that can help you position yourself, which I will introduce you to, is the gun box. So you can tell on the 4-hour whether or not price is going to come there. So here is a key area. So when price trade below the red line, then you are in the buy zone. So we're looking at that area, the price will trade into that area and maybe create liquidity, take it up before rallying up. So, but you are not going to sell this market. You want to buy it. So you want to wait for price to pull back, give you a buy signal, whatever it is, or buy trade opportunity, wherever it is that you are trading on your lower time frame for entries. You want to look for a complete trade in the upside. Okay, you're buying the market until it's proven otherwise. Please do not sell this market until it is proving otherwise. As you can already see that we have a very bullish Euro USD and a very bullish GBPUSD. So gold is the same. If you look at gold at the moment, gold is extremely bullish. We know that trading gold is a buy market most times. So what you will need on gold is to wait for a pullback. At the moment, gold is creating maybe historical high at the moment. Yes, gold is creating historical high at the moment. So we have a wonderful stretch. So there is no structure to compare gold with right now. There's no what do you call resistance level to compare gold with right now. But we can use that week as a key area. So we want to see the price break above that and then retest. So that can be a reasonable area to look at. And again, this is daily, okay? This is daily time frame. So you need to be very careful with structures like this. Okay, that's another reasonable area that you want to look at. Price will pull back into if you break that high. So if price break that high, it might pull back into that area for a continuation of a buy. So when you start seeing a pullback after it pushed higher to take out this high, do not sell it, or except you want to scalp it. Yeah, you can scalp it and show you know what you're doing. But personally, I'll wait for buy in that area on gold, and it will not be long for that to happen. So I'll wait for a buy in that area, and I'll look for a continuation, depending on what market has the structure and what can be projected. So gold is a buy, is a buy, is a buy. Okay, now there are fundamental news coming in this week. Let me just quickly show you that. Starting from a Monday, which is 20th, we have 21st, we have CAD CPI coming in, which is also very important. Then BOE Bailey speaks, so that will come in by 6 p.m. That might affect the market the next day. I like to look at the fundamentals on that. Then on Tuesday, on Wednesday, we have New Zealand coming in. Then British pounds is releasing their CPI, which is interest rate, which is very important, something to look forward to. And that's why I'm very, very concerned about that as well. So the next one is on Thursday. We have the British pounds also releasing PMI. We have the euro also releasing PMI. We have USD also releasing PMI, and also unemployment claims. So we have this whole news coming in next week, or reports. Then on Friday, we have retail sales on GDP 7 a.m. So with that, we'll be able to know what the direction of the market will go. So please endeavor to look at the trade, especially if you are a scalper. Don't trade when these news reports have been released. And if you're a day trader, also be careful. Do not trade when this news or report have been released until or before. If you have a trade running before the news release, close it. When it's a few minutes to 10 minutes to 15 minutes to close your trade and get out. Or you can leave it and break even, depending on your risk appetite, what you want to do. If you want to risk it, go ahead, but be careful. Do not leave an unprotected trade during the news. If your trade is not protected, do not leave it during the news. Nothing is guaranteed. All right, guys, I think that's all I need to share with you. So for some of you who are watching us for the first time, I want to encourage you to hit the like button, hit the subscribe button. And also, if you're new to trading, there is a link in the description where you can learn how to trade for free. Click that link. It will take you to my course free that you can learn how to trade. And also, if you are needing one-on-one coach or one-on-one mentorship or how to guide you on these things, listen, you know where to find me. The link is in the description below. Hit me up and I will get in touch as well. Thank you, guys. Do not trade during the news if you don't know what you're doing. It's a very, very important information I'm telling you. So please be careful. All right, I'll see you in the next video. And for those of you in the daily analysis setup that I send every day, watch out. We're going to be sending you those analyses, and I'll see you guys in the trading lab. Thank you, and I will see you in week 22. Bye for now, guys.